Welcome back to the channel, everyone. Today we're taking a look at OnClouds, on stock, currently selling at a $13 billion valuation, $42.57. On a side note, I just finished reviewing Nike stock. If you haven't seen that, check it out right here. And basically, I talk about how OnClouds has jumped in front of Nike. In my analysis, my conclusion was that I would prefer to stay on the sidelines on Nike stock. If you're thinking of investing in a retailer, this is one of the strongest name brands out there right now. They have surpassed Nike as the running shoe brand. When you compare Nike's fundamentals with OnClouds, which we'll do today, OnClouds is expanding fast. They are a smaller company. They are 10 times smaller than Nike stock. Nike has a $105 billion market cap versus OnClouds $13.9 billion. So they are still a small company and they have way more room to run. Nike is currently still on the throne, but OnClouds is knocking on the door. So for today's video, guys, we're going to take a look at OnClouds. Quick fundamental analysis. We're going to take a look at the latest quarterly data. So let's go ahead and get started. From a peak of $63 from the beginning of this year, down about 33%. So let's talk about why I do prefer OnClouds versus Nike. Besides having way better fundamentals than Nike, OnClouds has positioned itself as the premium sportswear brand. They are the premium running shoe right now on the market. They are hot. Let's go ahead and pull up the fundamentals. Starting with total revenue, which we're seeing 8 consecutive quarters of total revenue year-over-year growth. And now just check out these growth rates, guys. Back in 2023, 2024, you could see the growth rates were growing from a range of 20% to 30% year-over-year. The latest, they posted $944 million versus $632 million. That is up 49% year-over-year. The growth rate of this company is surpassing Nike like crazy. I guess I'll just pull it up real quick. This is Nike, guys. They only grew 1% from the previous year. Yes, they posted $11.7 billion, and OnClouds is only posting $944 million. So the smaller company, remember guys, smaller companies make big moves, and big companies make small moves. Smaller companies are definitely a little bit more riskier if you're investing in them, but you see higher growth rates with smaller companies, and the stock prices of smaller companies are way more volatile. As you can see, pretty much for Nike, a bunch of consecutive quarters of negative growth, and they only grew 1% on the most latest one. Compared to OnClouds, 8 consecutive quarters of total revenue growth. When you go to earnings per share, though, check this out. Previous 2 quarters, we're seeing negative declines. Now, why did we see total revenue grow 49% year over year, but we're seeing earnings per share down year over year? So let's go ahead and check that out. This is the Q2 2025 earnings transcript. And the biggest reason they're posting negative earnings per share year over year is the foreign exchange loss. This is the single largest factor affecting some of the numbers in the financials in OnCloud stock. So as you can see right here, the continuous weakness of the US dollar versus Swiss franc in the second quarter, closing near multi-decade lows, led to a meaningful unrealized foreign exchange impact in our net financial results. So what they say is this effect is mainly driven by the valuation of our US dollar-based assets, especially cash and cash equivalents at quarter and exchange rates, and does not impact or reflect the financial health of the business. So their financial health is great, but the earnings per share is just being affected because of the foreign exchange loss. All right, let's go ahead and go down to the profit margins. I mean, check out their gross profit margins, jumping up to 61%. And the biggest reason why these profit margins are so high compared to Nike's is because of that premium positioning that OnCloud has secured. While OnClouds is fundamentally a sportswear brand, they do want to get into fashion and become a lifestyle brand in general. We go into the statement of cash flows and also net income. When we look at these numbers, free cash flow per share, latest one, 32 cents, up 6% year over year, and also cash flow from operations, which is up 11% year over year. So go down to net income. We're getting a huge net income loss. Again, this is being affected same way as earnings per share is being affected. The foreign exchange headwinds are the primary culprit. Over 70% of this position was held in US dollars, which was impacted by the valuation at quarter and exchange rates, leading to reduction despite the positive operational cash flow. And just this past summer, On raises full year outlook, shrugs off tariff impact. They have raised their guidance this year, now expecting net sales to grow 31% year over year. And the CFO Martin Hoffman has currently stated, the currency shifts created significant noise on the print, including a sizable spread between reported and constant currency sales, as well as a Swiss franc of 140 million currency translation loss That flowed through to a reported net loss. Huge net losses that they're printing because of the accounting figures. Net income down year over year and earnings per share down year over year. So the underlying business fundamentals remain extremely strong. It's just the current accounting that they have to experience as the dollar rises versus the Swiss franc. All right, let's move on to expansion. So on the previous video I just made about Nike, I talk about how their direct-to-consumer channel is down 30% year over year. They're losing market share. Nike is losing market share. So OnClouds only has 54 stores worldwide, but a lot of people buy their shoes online. The direct-to-consumer channel right here grew 66% year over year, and their wholesale grew 65% year over year. Again, smaller companies are able to make big moves, while big companies that have been on the market for a long time, have stayed flat, they've lost innovation, and they've become stalwarts. All right, let's check out some of these numbers. Expanding their geographic footprints through controlled multi-channel growth. All right, so I'm just going to read off some numbers real quick. European region. Net sales grew 46% year over year. So by the way, these are growth rates it's showing on the screen, but I'm reading you guys net sales. This is from their transcript. So America's net sales grew 23% year over year. Europe's 46%. Asia Pacific, they're growing so fast in Asia, has hit third consecutive quarters of triple-digit growth. China alone, net sales of OnCloud more than doubled. So OnCloud, just by looking at this graph, just by seeing the growth rates they're posting, is coming for the throne to be the most premium global sportswear brand built on innovation, design, and sustainability. You know, corporate stuff, they got to post that stuff. This company is sitting at $13.9 billion. It is currently down 30% from its all-time high. The same price. This is the same price it was selling at in May of 2024. 1 year, and the stock price is back down to where it was, while the company has grown. Look at all the stores that they're opening into. Portland, Miami. They just opened up Tokyo, Switzerland, and they're premium looking stores. It feels different being in an OnCloud store versus when you're going into a Nike store now. And expected to add 20 to 25 stores per year in the midterm. Again, they only have 54 stores worldwide. So they have a lot of room to run. Let's just check out some other numbers to close it out real quick. Insiders own 31% of the company. Multiple analyst downgrades. No insider buying. Also no insider selling right now. Institutions sitting at an all-time high. Not financial advice, but OnClouds over Nike stock. I think you'll get a better return for your money in the long run. Nike isn't going anywhere anytime soon, but they are not a growth company anymore. OnClouds has become the growth company. Just watch these two charts and see how they perform in the next 3 to 5 years. At a $13 billion valuation versus a $100 billion valuation, Nike has become a stalwart. They are a cash cow now versus the hungry OnClouds growth company. They are coming for the throne. Building the most premium global sportswear brand. Let me know what you guys think about this company. Do you like Nike or do you like OnClouds more? Thanks for watching, guys. We'll see you on the next one.